Starbucks has seen a drop in sales in China by a staggering 29% due to COVID restrictions. Their international sales are also down by 13%. But in the US, they are up by a strong 10%. And in the past 3 months, Starbucks has opened an impressive 459 new stores, bringing the grand total to 36,170. While China's zero-tolerance COVID policy was a challenge, Starbucks has still managed to do really well in the last quarter. Total revenue has jumped from $8 billion in January 2022 to $8.7 billion. Earnings have also increased from $816 million to $855 million. Cash and cash equivalents are on the rise, going from $2.8 billion to nearly $3.2 billion. And while long-term debt has gone up slightly, it is still a minor increase from $13 billion and $119 million to $13 billion and $176 million. So while the recent results are really not that bad, as long-term investors, it is important that we look at the bigger picture. So first, let's see who owns this company. Individual insiders. That is a check with 2% of the company owned by individual insiders. So that is exactly the minimum we are looking for. And almost 1.9% is owned by Howard Schultz, who is the founder of the company. And are individual insiders buying? That is a check. In the last year, they bought shares worth almost $21 million and sold shares worth just over $3 million. And the super investors own this company. That is a check. 9 super investors own Starbucks. And are they buying right now? That is also a check. They bought in the last 2 quarters 181,000 shares and sold over 57,000 shares. So it all looks very encouraging. But how is the financial health of Starbucks looking? Return on invested capital. That is a check with 31.1% 10-year median return. And we want to see this number higher than 10%, so that is very nice indeed. And free cash flow growth? That is also a check with 11% compounded annual growth rate. And it just made it because we want to see this number higher than 10%. And what do we know about net profit margin? It is a check with 10.1% compared to a sector median of 6.4%. But if we compare it to some of the main competitors of Starbucks, the story is not that rosy. Restaurant Brands International has a margin of 15.1%, McDonald's 26.6%, and Chipotle Mexican Grill has a lower margin, but very slightly with 9.6%. So it is all good, but not exceptional. And now let's take a look at shares buyback. It is a check with minus 24.7%. So they bought a lot of their shares back in the last 10 years. And that is very nice because without investing any extra money, we become owners of a bigger part of this business. And the debt? It is an X. It would take them over 3 years to pay back the debt with a 5-year average free cash flow. If we would calculate it with a current free cash flow, which went down substantially, it would take them over 5 years. And does Starbucks pay any dividends? Yes, they do. The dividend yield is 2%, so you get $2.12 annually per every share. And the payout ratio? That is an X at 68.2%. And we want to see the payout ratio somewhere between 20 and 50%. So that is not a very sustainable level in a long run. And what about dividend growth? It is a check with 13.7% 5-year annual growth rate. Okay, so now let's value this company using a discounted cash flow formula. The PE is 36.8, so it looks expensive at the first glance. And for this calculation, we will use 5-year average free cash flow instead of the recent one. And the reason for such a decision is that their free cash flow is going up and down substantially through the years. So an average should give us a better idea of the real value of this company. Okay, so let's estimate the growth of Starbucks for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. So in the low scenario, we will estimate a growth of 5% for the entire 10 years. In the medium, 9% and then 7% growth. And in the high scenario, 12% for the first 5 years and then 10%. So the high estimates are basically in line with all the growth metrics for the last 10 years. And with such estimates, the intrinsic value in the low scenario is $47, in the medium $61, and in the high one $79. But these are not the prices we should be looking for, because we have to always add a margin of safety. I use a 30% one. And with such a margin, we get in the low scenario $33, in the medium $43, and in the high scenario we get $55. And the current price is around $105. So all the valuations are in the red. That means that this stock is currently overpriced. So Starbucks has some healthy fundamentals. It's doing okay even with all the problems in China. But unfortunately, it is quite expensive at the current time. So let me know in the comments, do you think it is a great company at a fair price, or is it just overvalued? This analysis will of course be integrated into our stock ranking, to which you can gain access on our Patreon page. And if you want to see the analysis of McDonald's, then click here. But if you are more into Burger King, then click here. Thanks for watching and bye bye.